Something strange is happening in the stock market. The same hedge funds that once bet billions against AMC are now quietly changing sides. Liquidity is drying up, synthetic shares are piling higher than ever, and major institutions are flipping from short to long positions. So what's going on behind the curtain? Why are the same players who wanted AMC to fail now seemingly backing it? Today we're diving deep into the hidden war playing out in real time, where fake shares, dark pools, and collapsing liquidity might finally be catching up to the short sellers. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone, remember, this is not a financial advice video. At the center of this entire storm sits AMC, a stock that refuses to die no matter how many times Wall Street tries to bury it. Today we saw yet another example of that resilience. Despite millions of shares being dumped into the market, AMC barely moved. And here's the kicker. 73% of all trades happened off exchange in dark pools. That means the majority of buying and selling didn't even happen on public exchanges. It was hidden. Yet, the stock still held strong. This is why many believe someone powerful, an institution, or a large fund, has finally sided with the retail investors, the so-called AMC apes. According to data shared by Stefan Vikstrom, the volume in AMC was massive today, yet the price dipped only about 1.47%. That tells us one thing. There's huge demand quietly soaking up every sell order that's thrown into the market. And with AMC's upcoming financials expected to be strong, the entire setup looks increasingly bullish. But the real story isn't just about today's price action. It's about how institutions have completely changed their stance on AMC over the last few years. Go back to 2020. Wall Street's consensus was that AMC was a dying theater chain heading straight for bankruptcy. But fast forward to today, and that narrative has flipped. The same big banks and hedge funds that shorted AMC back then are now buying shares, adding calls, and closing out their put options. Take Goldman Sachs, for example. Once one of AMC's biggest shorters, they've now unwound their short positions and gone long. They're not alone either. Several other major funds are doing the exact same thing. It's almost as if they know something big is coming. Of course, not everyone's happy about this. The firms that are still trapped under billions of synthetic shares can't afford AMC's price to rise, because if it does, they're done. Margin calls, bankruptcies, and forced liquidations would follow. That's why they keep using every trick in the book, from dark pools to algorithmic suppression, to hold AMC down. But even with all that manipulation, the data paints a different picture. Retail investors aren't selling, they're accumulating. Institutional ownership is climbing too. That means both sides, retail and big money, are holding and buying. So why isn't the price moving? Because of synthetic shares, those fake, non-existent shares created through naked shorting. They dilute the real buying power. Every time someone buys, there's a phantom share being sold to cancel it out. And as Elmo pointed out on Twitter, AMC traded over 14 million shares in just the first hour today. That's not normal volume. That's desperation. Those creating synthetic shares are doubling down, trying to delay the inevitable. But their problem is growing by the day. And while they manipulate, retail investors are buying more, holding stronger, and refusing to sell. Meanwhile, a new wave of legal action might finally start changing things. Genius Group, another heavily shorted stock, confirmed in an official 6K filing that it plans to file a market manipulation lawsuit by November 15, 2025. If Genius Group wins or even forces regulators to take the issue seriously, it could set a precedent, one that AMC and GME could follow. Imagine what happens if these lawsuits uncover massive naked short selling and force real covering of fake shares. That could trigger a domino effect, leading to a short squeeze the likes of which the market has never seen. But the manipulation doesn't stop there. Another revelation came from Joshua Sky, who exposed how IBKR Interactive Brokers allegedly sold non-existent GameStop shares. essentially crediting customer accounts with fake stocks. That means people believe they own GME, but the broker never actually held those shares. It's one more piece of evidence showing how deep this manipulation runs. The same systems that suppress GME are also used against AMC dark pools, rehypothecation, and counterfeit shares that exist only in digital ledgers. And now, with liquidity drying up, the short sellers are in a real bind. The reverse repo market, which allowed them to borrow easy liquidity to fund their short positions, is collapsing. As of October 24, 2025, the total reverse repo balance has dropped to $2.4 trillion, compared to $2.27 trillion just a year earlier. That decline signals shrinking liquidity, the very oxygen that short sellers depend on. Without that liquidity, creating more synthetics becomes extremely expensive. It's why we're starting to see cracks, hedge funds struggling to maintain collateral, selling off assets, or even repledging client securities just to stay afloat. According to analyst Dario's report, firms like JF, Jefferies Financial, have sold or repledged over $20 billion worth of client collateral to cover liquidity holes. That's a red flag. It means they're running out of safe assets to use as leverage. When you zoom out, it's clear that these hedge funds are stretched thin. They've relied on reverse repo funding, dark pools, and fake shares for too long. Now, as liquidity evaporates, they're fighting just to survive. Meanwhile, reports from journalist Kristen Shaughnessy show that hedge fund assets have hit a record $5 trillion globally, with inflows of $34 billion in the last quarter. At first glance, that sounds like a success story, more money entering the hedge fund world. But when you dig deeper, it looks more like a bailout than confidence. Why? Because just a few months ago, money was flowing out of hedge funds. Many were facing huge losses, margin calls, and liquidity crises. The sudden inflows likely aren't investors chasing profits. They're emergency injections to fill capital holes and meet margin requirements. So, despite what Wall Street wants you to believe, the picture behind the scenes is far from stable. Hedge funds are getting squeezed, liquidity is collapsing, and regulators are starting to face public pressure as lawsuits pile up. And through it all, AMC stands tall, supported by a retail community that refuses to quit. The same institutions that once shorted it into the ground are now quietly turning bullish. The data, the filings, the sentiment, everything points to one conclusion: something big is brewing. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Before ending the video, I want to say one important thing. If you have watched the video till this point, it means you are among those who are true AMC supporters. And for supporters like you, we have created a Facebook group. You'll find the link below. Join the group and become a part of our community. Also, for our community members, we have a PDF book inside the group that explains how to do stock analysis. After reading it, you will become an expert in fundamental analysis. Thank you for watching.